Welcome on board Sanjiv Bhasin then and find out what he's making of the market right now. Sanjiv, hi, morning. It's sweltering hot here in Mumbai and I'm sure it's no different in Delhi as well, and it's heating up for the markets too. You had warned of this kind of weakness and volatility in the markets. What next? Do you see this weakness continue for some more time?
Yeah, good morning, Aisha. Well, we've had a very sweet squall in the last 3 days. The rainfall has come, brought the temperature down by almost 10 degrees. So no complaints. And yes, we warned you, take some money off the table. There was too much of froth, and that has played out well. You've seen commodities lead the rally, gold and silver. So stock specific, we've been correct. And we still think there is a little bit of more bloodletting. However, in the short run, we think after 22,800, if you fall to 21, 22, 150, there should be a lot of support here. We are looking at one pullback rally because all negatives are slowly getting priced in. Now, in this atmosphere, greed and fear play out perfectly. So you have to balance yourself. Right now, it is better to be a trader and try to, hedge your positions on the short side also. But look for good entry points into stocks, which we think are giving you a very, very good opportunity. So even at this level, we are finding very, very good large cap plays, which we think can weather this storm and perform even better in the coming weeks and months.
So let's hear out that list. Everyone's waiting to hear that out. Where is it that you're safer in this kind of global market environment?
So Aisha, lever is my top pick. Now we've been doing a sit for the last week from 2250 downwards. The simple reason is that rainfall is going to exceed estimates which you have given on your own channel. A, B, we think the food security and the other harvest side is going to be very, very pleasantly surprising. Inflation is well contained. And fourth, in the upcoming election, the biggest beneficiary is the rural income. Lever is a must-have in your portfolio. It is corrected from 2,700. And I think now the risk reward is to book out of some of the heavy performing FMCG and get into lever. Lever is going to be a classic play of a defensive stroke, rural income play where I think the rising incomes and lower inflation and better monsoon is going to forecast. So at this price, we would say a sip in lever offers you just a 50 rupee downside, but a 400 rupees upside. Second, we are very, very positive on stocks like LTIM, where there is negative news flow of some resignation. But I think that was already played out by insiders. LTIM, according to me, has a very good risk reward at this 4,800. We could look at upsides there. Third pick would be India Bull Real Estate, which we've again touted that you should be booking profits in the heavy duty names of Godrej and DLF and getting into this stock at 6,500 market cap, 4,000 crore infusion, and now looking to encash, visible assets which are self-owned. There is no liability on that. I think India Bull Real Estate could be a very, very sweet spot. In that, you could also add on declines today and ICICI Bank, which I think will come out with the best ever results. So these 4-5 stocks should give you a good portfolio pick. But don't miss the woods for the trees. Lever is looking very, very attractive after this almost 18% correction.
Very interesting contra call and perhaps the first on the street to bet in on Unilever.
Meantime, wanted to get in your take, Sanjiv, on Bharti Hexacom. Jefferies is very bullish, saying it's the best play within Indian Telecom. And in the long haul, FY24 to 27, they're seeing a 16 to 21% CAGR. Your take?
Yeah, one, and Jefferies has also upgraded my old favorite IDFC Bank. So I will go with, I think if IDFC Bank is going to 120, then Bharti Hexa can join the rally. I think it's a very good play on the aspirational rebels which are rising as far as data and so on. But I would bet contrary. I think the opportunity which is coming in Voda Idea will be once in a lifetime. That stock is going to change patterns. You must subscribe in that 10-11 bracket. That stock could be the stock of the year. So we are preserving cash. We are very, very bullish on IDFC first. That has been my pick from 30-35. Jefferies has upgraded that target also. And I would subscribe very heavily in whatever quantity and cash you have into Voda Idea. That would be my better pick than the listed names which are already trading at premiums.
Okay, in the meantime, Economic Times this morning is reporting that Apple is in talks to manufacture iPhone components, and Titan is in focus because the components are expected to be for the camera modules, for which they're in talks with one of the Titan subsidiaries, that's Titan Engineering and Automation, which does precision component manufacturing as well as designing. The Murugappa arm also is in the fray, it seems, and they may be finalizing a partner in the next 5 to 6 months. So these are the two segments or stocks which are in focus this morning. But Sanjeev, all excitement on Elon Musk's visit to New Delhi, 21st, 22nd. And a lot of chatter around who he's going to be meeting other than the Prime Minister. And it seems the Tata Group seems to be the chosen one. At least that is what the reports seem to be indicating. Any play around the EV infrastructure you think one could look at right now?
Well, Aisha, it's already played out in the battery stocks. They more than doubled. I mean, Excite is at 420 and now coming with upgrade of targets. Elon Musk, basically, his stock is underperformed. It's down 37% year to date. So I think he's trying to make headway now into India, and Tesla is a much needed impetus. I don't know how successful it will be, but yes, and he's tying up with the right partners. Tatas are the right people to be. But it also tells you that the longer term, India is the destination. And this PLI and China one policy is telling you that you are getting everything here. When last, 20, 30 years back, Apple forayed into China in a big way. And now everything is coming to India. When you go, I was in London recently, all the brand ambassadors of the fashion side are all Indian actresses or models. When did you see that? So that's a sign of India being the most touted investment globally, and the demographic playing out, premium playing out perfectly. So I think look for some of the EV plays as far as the input costs go, like batteries and all, which have already run up in anticipation of this. But I think Tata's will be the best beneficiaries of that. It also highlights that now Apple is looking to expand its base. So has Bosch, and those stocks have exceedingly well performed in the near term and in the medium term.
Sanjeev, another of your recent calls, ONGC, has played out very well, and a mammoth move yesterday too. Part of the crude spike beneficiary, and of course a brokerage upgrade as well coming in. Now what? Do you think meat of the rally has already played out in ONGC, or can someone still look to buy afresh?
Well, Aisha, thank you. Happy Ashtami. And you reminded one of the positives. Yes, Vedanta and ONGC have been two of my top picks, which have done exceedingly well. From that 260, 270 Vedanta zoom to 390. I will even see 490 coming. Look at where silver prices are. Look at where zinc is, copper. And they are the only producer of nickel in the country. ONGC is a churn company. I mean, you've had re-rating of all the PSUs. ONGC for me is a 400 rupee stock. Simply put, their capex is showing that their return on equity and reduction of debt is part and parcel of the cash accruals. Government reforms in oil and sector and gas has been exceedingly positive, and I think earnings are very, very key. This stock has hardly any float as far as mutual funds and FIs go. I think there will be a beeline once it crosses 300 or the previous high of 295. 390 to 400 is my target on ONGC. Use all declines to buy ONGC Vedanta, that they should be outperformers.
Right, and Sanjeev, given the fact that, reports have spoken about how 57% of India's total apparel market, within that, you've got the value fashion segment, which is one of the fastest growing. Latest news as well indicating that Inditex is going to bring Bershka and Zara home to India. Just wanted to know what this spells out for the listed players.
Well, very similar names. I was on a holiday and all I saw was the shopping by the ladies in those names which you said. And it's strange and uncanny. Now you have everything in India. So I think, the flavor of the day, month, year, and the decade and the century is going to be India. And it tells you that, the brand ambassadors or the ones who are doing the part and parcel of servicing those industries are doing very well. Case in Pick, Zomato, TB FinTech, maybe insurance and food have not done as well as the service providers. And I think that will be the case for the players who come in as far as the franchise goes. But it's evident that the rising middle income is giving an opportunity for big brands to make a foray into India. And that means all dips are buying opportunity if you have the correct selection of stock and the patience. But yes, this is a very, very, optimistic view on India going forward, that large cap brands are actually making a foray, which is why I told you that the best of, ladies makeup, ladies, all lingerie is all being flouted by top models from India rather than, some of the overseas names, which makes you more patriotic and bullish on India.
All right, fair enough.
If you like this video, then like, share and subscribe to ET Now.